What's up, guys? All right, so
Hey, how's it going?
I'm trying to write out the banner we're gonna use.
Here, hang on. Grab something.
All right. I think Lyft reports earnings at 4:30. I believe. Let me know if that's correct. If Lyft posts earnings at 4:30. Peloton. What's up, chat? Yeah, I think Lyft reports at 4:30. GFS a week ago. What's up, DS? What's up, Dwayne? All right, so do y'all think Lyft is going to have good earnings, bad earnings? I know we have Chipotle as well, and then Peloton just flew this week. Here's Peloton right here. Peloton is up to 34s. We also are holding a call option in Snapchat. Here's Snapchat. And so that call option is paying us pretty well right now. Green or red so far today? I'm definitely red. And here's a question. Would you guys prefer me to stream the entire conference call of Lyft? Lyft must have just reported earnings. Let's see what they were. Look at the tank in Lyft. So Lyft must have just reported earnings. Let's see. All right, so we're waiting to report Lyft. It looks like they came out with something. Okay, we got a frozen screen. Let's look at Lyft, which is now down 3% on the day. Let's see. Oh my gosh, dude, this is so unnecessarily difficult. That way to look up earnings. Okay, here we go. Okay, Lyft announces fourth quarter results that were solid. They said 2021 was a big year. We strengthened our financial position and continued investing in exciting growth initiatives. I'm proud of the team for what we've accomplished together, and I'm looking to build towards momentum. Logan Green, the co-founder and CEO of Lyft, said that. Lyft saw fourth quarter sales. We're going to drop the results for Lyft right now. They did just report earnings. 70% increase. Let's see what they have. Let me make sure this is the full report. But yeah, Lyft just reported earnings. Lyft reported quarterly sales of 969.9 million, which is better than the analyst consensus estimate of 938.86 million by about 3.5%. It's a 70% increase over sales of 569.9 million for Lyft in the same period last year. So here is the Lyft results. They reported quarterly sales. And so I'm also showing Carol how to do this. So basically, I'm using Benzinga to look this up. And so you can see here, you basically, if you go to Benzinga Pro like this.
Yeah.
And you just type in Benzinga, it'll be on the screen. You log in. And then once you're logged in here.
Oh, yeah.
Okay, so look at, and so Lyft is swinging to a profit right now. Look at Lyft. It's up to 4260s for Lyft. But then you just click on a symbol anywhere. You click on a symbol. And then there's the screen, and you can type in whatever symbol it is. Here we're typing in Lyft, and then you can see Lyft reported active riders for 3 months ending in December 31st is up 49.2% year over year. So we're going to report that as well. So active riders for 3 months ending December 31st is up 49.2% year over year.
Huh.
Yeah, no worries, Darb. Hey, thank you. One life, one chance. I appreciate you, bro. Now, we're actually not going to monetize this pawn just because if I do decide to stream the earnings call, sometimes they have like my last earnings call from Amazon got a copyright strike. It wasn't a strike. It got a copyright. Let me see what it said.
Like notice.
Yeah,
or
it gave me a copyright notification, basically. And you know what it was? It was for the theme music. It was for the theme music on the Amazon holding theme music. Literally the Amazon holding theme music. I received a copyright claim. And it was like 30 seconds of Amazon theme music. And some jerk tried to copyright it like he's going to make some money with by monetizing 30 seconds of the Amazon hold screen. So we're not going to monetize it. It's all good.
Yeah. And I'm trying to understand more and kind of learn more about just the stock market, investing, all of that, a lot of these different companies. I know that there's a lot that kind of goes on.
Yeah. What is Corsair? It's CRSR, I believe. Okay, so we might actually, when is Corsair earnings supposed to drop here? Is what I want to know. Yeah, so when you're building, I'll do this for you. Anytime you have to stream anything, I'll do this for you. There we go. Yeah, all good. Hey, John, hope you did well today. Facebook puts printed for me. Yeah, man. Luckily, I sold my Facebook position yesterday. I lost today, but what I am making money on is my Snapchat call option that I bought this morning in pre-market. So right now on that call option, I'm up like $72. I'm still down on the day, but it's not too bad. I'm up like almost $100. And I think we're just going to hold it. It's an April call option. And so with options, you're buying a contract. You're not buying the stock itself. You're not owning any shares in the company itself. You're buying the contract, and you're basically betting with somebody else whether a stock is going to hit a specific price by a specific date.
Okay.
Right. And the price that, so if I buy a call option, that means that I'm betting that Snapchat here, and I do have a call option if we look at my trades right here, wherever it is, I can't find it. Okay, so yeah. I have a call option on Snap, and the option expires, or it's a $37 strike price. So if by April 14th, 2022, Snapchat is over $37, I can what's called exercise, which means I can get that many shares for much cheaper than it is, whatever the difference is. So in this case, if it was at like if it was at 40 and I exercised it, then I would get however many shares come with it at a cheaper price, right?
Okay.
But nobody ever exercises it, so it's not really something you have to worry about. People just sell the contract. So it's like if it's in the money, I can sell the contract to somebody else that might like it, or from the original guy that wrote it, just to get out of the trade, because he might be worried it's going to keep going up. And it's kind of complicated, but you just trade the contract. And there's a lot of different details to it. We'll talk about that later. But
yeah, you're gonna, because I'm kind of thinking like, well, you have to either sell it to someone else, or the guy has to buy it back from you. Can they refuse to buy it back from you, and then you're just stuck with it?
Yeah, well, no, you can sell it to anybody. It doesn't have to be the guy.
Okay.
Like you can, there's a huge option market. Everybody's looking for options. Yeah, it was actually right after the opening bell is when I did it, Darb. You can't actually buy or sell in pre-market. It has to be after the opening bell. So yeah, it was after the opening bell is when it was. I realized I didn't promote this stream at all. I should probably share this thing to everybody. Here, let me find it. But yeah, options are a different story. First thing you want to really understand is like you just want to understand about stocks first. Like stocks are the big things that you want. Should I stream should I stream the Corsair earnings call, or should I just react to the earnings that happen? Guys, let me know. Yeah. Yeah, I mean, I'm on Thinkorswim right now, so I have a $30,000 Thinkorswim account, and so I can day trade. What I've done before is I've day traded option contracts a lot. And if you want to see what that screen looks like here, let me see if I can disconnect this. But like this is the TOS screen that I'm using. Hold on, wait, let me detach this. This is the TOS screen that I'm using. It seems really complicated, I'm sure, to Carol.
Yeah.
You know? But
It's
but yeah, this is here, let me.
Yeah.
Yeah.
I'm like,
yeah.
What?
Yeah. And so you can see this is the screen I'm looking at right now. And here's my call option for Snap. I held one contract, April 22nd, April 14th, $37 strike price call option bundle. It's 100. It's equivalent to 100 shares.
Oh, well, when you start looking more at it, it makes, you know, you got the position.
Yeah, these are the different contracts. These are all just different contracts. So I can buy them as close as February 11th, which is, you know, not going to say what that is, but that's 3 days away. Or I can buy them in March, you know, or April, or longer term than that. So yeah, so here's Lyft. And again, Lyft did report earnings. I think the Lyft call is supposed to be scheduled for 4:30 p.m. Stream if you are able. Yeah, we're going to stream. Would you guys prefer? I guess I'll do a poll. Or just react to it. So we'll give you a few options.
Call live, yeah.
All right, so yeah, so if y'all want to see us, and then we can also do just react to them. And vote on the poll. Let us know, because I'll stream the call. I don't have a problem with it. I did it with the Amazon the other day. Would love for you to stream and just react simultaneously. BKKT and PTON calls was payday for me. Nice, Justin. But yeah, y'all vote. You know, would you prefer us to stream the Corsair or Lyft earnings call, or just react to it? Because I could do either one. I think Corsair has a little bit more hype. The way I check it is like the one thing I check to see like hype in a specific stock is I go to YouTube and I just do this. And like my plugin gives me like a ranking.
Yeah.
So I see volume, competition, all that stuff. And then we can also do the same thing with that and see a ranking, which not that popular.
You know, that's cool how you could get that information.
Yeah. They also have, there's also Chipotle that has earnings today, and a few other things here. Let me see what else we got.
What about some type of bulletin where you could essentially? Here, I'll talk to you. I'll talk to you later.
Yeah. All right. So far it's a little bit split, man. Lyft call live. So I think more people here would rather see the Lyft call live. Let me put some more music on. Carol still hold her Lulu shares. Let's take a look at Lulu. My Snap call is printing right now, so you love to see it. Here's Lulu.
I feel like I was talking about Lulu years ago before it was really as popular as it is today.
Here's Corsair. Did Corsair drop some numbers? It's volatile in after hours. Are they doing an earnings call? So this has been freezing. Here's Corsair. Let me see if Corsair lets you listen to the call. So to find an earnings call, it's actually kind of complicated. You go to investor relations, and then you scroll down and you look to see. It looks like they just dropped it. I don't know if they're doing a call. Is Corsair even doing a call? Oh yeah, here it is. It's at 5 p.m. So it's in 45 minutes, which we could do that too. We could honestly do both. We could do the Lyft earnings call if we wanted to. We could join that thing, or we could do either one really. Kind of weird seeing you in the afternoon, kind of a first for me. Chipotle, yeah, let's look at CMG.
Yeah.
Yes, Chipotle flying up this morning, man. Wow. Or this afternoon, look. Wow, look at Chipotle.
Yeah. I should have gotten Lulu shares.
Yeah, I mean, you could have. Lulu has done really well.
Yeah. I mean, I like their leggings, but they're just ridiculously expensive. but now everyone's wearing it because of, I think, the whole athleisure thing where you have people, you know, after COVID and the lockdowns, people just realized they didn't feel like wearing jeans anymore.
Yeah.
And they'd rather wear stretchy pants all day, which I'm not talking down to anyone because that's me. Like I used to tell John, I used to be like, hey, don't wear sweats out in public. Like you're not supposed to wear sweats out in public.
But
now I'm trying to wear sweats out in public because it's just, you know.
Yeah.
But so that's why people want to wear leggings, and then of course they want, I guess that's the trend, you know.
Yeah. What's up, Don? So there's two things I'm doing in this stream right now. I'm looking for swing trades to get involved with. So I'm looking for swing trades, and then I'm also going to live stream either right now it's between Lyft and Corsair earnings. Look at Peloton though. I also want to talk about Peloton though. Look at Peloton. Peloton is ripping up. It's at almost 38.40s. And honestly, I was straight wrong with this one, man. I was always skeptical of Peloton. I never trusted it.
But it makes sense. So you're talking about just because to me, it makes sense that people are looking to, they don't want to go to the gyms with.
Right. But it's kind of like a Bowflex, you know, like if you really lift weights, you're going to lift free weights. If you're really a bike rider, you're going to ride your bike. You know, you're not going to need a virtual reality bike. It just doesn't make business sense. I don't understand who's going to spend that much money on it. The only thing I think you could really target with it are the super rich, because I think most people are, instead of buying a $1,500 bike that sits in one place, they're just going to buy a $1,500 bike. You know? So I mean,
yeah, but in this, I think that kind of like the Bowflex, this technology, kind of like cell phones, not as fast, but to some extent, where there's going to be a new technology, a new bike, something new that'll come in the next several years. I'm sure that'll be more immersive.
Right, more competition is certainly
whatever.
Yeah. Here, hold on one second. I do have this, and this is the Lyft call right here. Or hold on, I had it. Where'd it go? It popped up. Okay, is this it? Yeah, look, here's the earnings call. All right, here, let me mute the stream real quick. Or here, let's see. Here's the Lyft earnings call. They play the freaking music, so luckily, hold on. Look. Okay, it's still on hold. I'm trying not to play it for too long, so we're still waiting on the Lyft earnings call. So once that starts, it's supposed to be in 10 minutes. We'll go ahead and stream that. And then Corsair is supposed to start at 5. So I'm going to get Corsair, the earnings call for that up, and we'll go ahead and stream both of those. So look, you always do it. You type in the symbol. No, that here, I'll tell you later. Here, I'll type it right here. But yeah, so here's Corsair. You look for investor relations, and then you go to this and you look for the earnings call. Corsair says their earnings call is not going to be until 5 o'clock, but we could wait here. And first, they're going to make you type in your name. I always use the same one, and then you know we're good. We just wait for it. They're playing the freaking music. Corsair is like. It's them and Logitech. Corsair generally makes headphones. They make the mics and the headphones.
I know what you're talking about.
Corsair, you know, I have a few headphones. Yeah, this is Logitech, but Corsair is like their competitor.
Yeah, but I've seen them at Best Buy. That's why it's familiar.
Yeah, Peloton reported this morning Peloton reported this morning, bro. So yeah, Peloton was early. Corsair is going to start at 5. Yeah, Corsair makes a lot of things. Right, but here's the Lyft numbers. And again, Lyft reported quarterly sales of 969.9 million, better than the analyst consensus of 938.86 million by 3.31%. It's a 70% increase over sales of 569.9 million year over year. So overall, Lyft saw increase in sales for sure. They also reported that the active riders for the 3 months ending in December 31st is up 49.2% year over year. And yeah, we'll see what happens. The earnings call, we're sitting on hold for the earnings call. So we're gonna broadcast the earnings call live here as well. So yeah, and that's how you find it. Like, just for reference, if anybody wants to find the earnings calls yourself, it's super easy to do. Like, if you want to listen to it without having to join my live stream, I mean, you can always join my live stream, but say I'm not streaming one, And this is also for Carol to know as well.
Yeah,
you go to Google. Yeah, you go to Google. Like if we want to look at Chipotle, you type in the symbol and you just type in earnings call. And you look for specifically investor relations websites, like an investor relations website with Amazon. On the Amazon earnings call, it was like aboutamazon.com. It was an investor relations website for Amazon, and they'll have like something scheduled. So like here's Chipotle. We can scroll down. Look, Chipotle investor room IR, which is investorrelations.chipotle.com. You can click that, and it's always going to be a webcast. And then you just kind of scroll down until you see it. You look for what's going on. Look, here's the earnings call, full year 21 results. It's at 4:30 Eastern time, which is in about 7 minutes. You can read more here, and it's the same thing. You listen to the webcast. So we have Chipotle there as well. Corsair starting to dip here. But that's how you do it. And it's really easy.
Yeah, you're probably gonna have to show me a few more times.
Yeah, it's all right.
Before I get it.
Yeah, it's all good. Hey, what's up, Spec? Yeah, it's CRSR. Peloton reported numbers. Peloton, when is the Peloton earnings call, though? Let me see. I thought that was this morning.
Here, I could look some of it. Let me try to look it up on my phone so I could.
If you using the computer is going to be much faster. So look, investor relations, Peloton. You go to Peloton here, and then you look down, and we are looking up. I'm pretty sure I know they came out with their numbers already. Yeah, here's the numbers call. So you can see here, look, it was at 8:30 this morning, Eastern Standard Time. So Peloton already reported earnings, and I believe I have the banner saved from that. So yeah, here's the Peloton numbers. Peloton saw third quarter revenue of 950 to 1 billion, which was actually a little bit lower than expected by about 26%. It was like 26%. If it's 1 billion, it's 26% lower than expected. They ending connected fitness subscriptions were at 0.93 million, so 930,000. They saw fiscal year 22 revenue at 3.7 billion to 3.8 billion versus 4.26 billion estimate. So Peloton actually had worse than expected numbers. So Peloton numbers were actually worse than expected. And here's the part of the stock market you really have to understand. The everyday brand new investor might look at this and say, hey, okay, well, why don't you just wait for the earnings to come out? If it has good earnings, you buy the stock, hold it for a day and sell. Easy money, right? Not true. Peloton had worse than expected numbers by like 26%, and Peloton flew today. And so it's not binary, just, buy or sell based off of earnings. You have to watch and wait. It's not something that it's a given. It's not just going to go up because it has good earnings. Traders are very intuitive, and they look at a lot of different nuance. They look at a lot of nuance behind what's going on in those earnings calls. So they might see one thing that they don't like, and that one thing would just make everybody super bearish or pessimistic about the stock. And so
a lot of it is psychological.
Yeah. But yeah, Peloton flew, and they had good numbers. What I think Peloton is really up from is that they had a second quarter with 2.77 million connected fitness subscriptions. So they ended the second quarter with 2.77, like 2.75 connected fitness subscriptions, like almost 3 million. So they saw a lot of subscriptions, and these are people that, number one, have purchased their bikes, and number two, are paying for this monthly subscription every single month. And so, that was, I think, the bullish sign that people needed for Peloton to be okay. I think that was what ultimately helped people stay a little bit more optimistic about Peloton. All right, so we're going to check the Lyft. Yeah, for sure.
I wonder how much each of those subscriptions. I mean, you have to have the bike first.
All right, hold on 1 second. Okay, we're still on hold with Lyft, but Lyft is supposed to start in 4 minutes. Chipotle up as well. Yeah, Peloton is also up on buyout rumors. Yeah, and this is what NASCAR is saying too, is guidance. So like a company will report like first quarter, second quarter, third quarter earnings. They'll also post guidance and expectations, like basically what they expect to happen in the next quarter, or in the next 2 quarters of the next year, whatever it is. And they have to tell you, or they don't have to, but as a courtesy to the investors, I'm not sure if it's legal or what, it's legally necessary or what, but they generally give you an update on what their expectations for the next quarter is going to be. Like Amazon reported better than expected numbers, but they also said that they expect the weighs on workforce and issues from this last quarter to weigh in the next quarter as well. And so they gave that type of expectation and guidance towards it as well. So the guidance is important because it's basically what they expect to happen in the future. And so if the company themselves are saying, hey, we don't expect to do really well this quarter, a lot of short-term investors are going to sell, and that can cause kind of downward action in the stock, if that makes sense.
Yeah.
Why is Corsair going down? I'm not sure. The earnings call, we have the Corsair earnings call waiting. We're waiting for it. It's not yet available, so we're waiting on the Corsair call.
Let's see where you put that thing up in the window.
Yeah, because the sun shines straight in your face.
Yeah.
I wanted to play Corsair, but the premiums were already up. I'm playing it mentally. Yeah, for sure. Kind of test your skill. Peloton up on buyout rumors. Yeah, let me read that buyout rumor. Let me see if I can find it.
Look at Chipotle now.
Yeah, Chipotle's flying. If we want to see why, we can type in CMG here. And so Chipotle Mexican Grill says that the board approved to up to added 200 million in buybacks. So yeah, they're going to buy back shares, which reduces the number of shares in the float and thus is the opposite of dilution, right? So if there's less shares available, each remaining share is more valuable. That's why that's a bullish sign, right? Up to 200 million in buybacks. Chipotle rallies after comparable sales beat, raising development expectations. All right, so we do have Chipotle numbers. Chipotle announced fourth quarter and full year results. They saw non-GAAP EPS of $5.58, which was better by about 29 cents than expected. Revenue of $2 billion, which was much better than the 40 million expected. They really, man, Chipotle killed it, man. Wow, that is one of the biggest differences. That's one of the biggest spreads I've seen. So apparently they were expecting 40 million in revenue, and it showed 2 billion. That can't be right. Is that right? Let me know in chat. That can't be right.
That's a lot.
That's a huge spread.
Yeah.
But anyways, Chipotle saw fourth quarter adjusted EPS of $5.58, which was better than the $5.26 estimate. So these are earnings per share, like basically what the difference in the price in the quarter of the stock price is. So like if Lyft was at 35 and in the first quarter, and then in the second quarter it was at 40, then the EPS would be $5. It would earn $5 per share. Basically, it's gone from 35 to 40 in that quarter. Does that make sense?
Yeah.
That's the EPS, earnings per share.
Okay.
And so Chipotle saw adjusted EPS at 558, better than 526 estimates. Sales of 1.96 billion, which was in line with the expectations. Fourth quarter comps up 15% year over year. First quarter same store sales, which were up in mid to high single digit range. Let me know if that's right though, guys. That sounds like a pretty big spread.
Yeah. That's a lot. That's a big difference. Here, I'm gonna put something in that.
Okay, yeah, all good. Carol gave me this short little chair. It's hard to sit. Yeah, I would love to swap actually. You can actually have this chair if you want it, if it's like a comfort thing. It's just hard for me to, you know.
No, it's okay.
All right, cool. All right, nice.
Is that better?
Yeah,
I just put that up.
Yeah. See, now you're doing what I'm doing.
Yeah, I just don't want enough because you could see it from the street.
Yeah, it's all right. All right, so yeah, but what I'm saying, tell me if this is right. Yeah, I mean, ENPH killed it, but this is what I'm seeing, and this is the confusing part. Okay, this is what I'm reading right now for Corsair. Let me check real quick the Lyft call. Hold on. Now, can y'all hear the call? Can y'all hear the call? You can hear it, right? Yeah, they should be able to hear it too.
Continuing COVID-19 pandemic, the performance of our business,
now can you hear it?
Results and guidance, strategy, long-term growth, and overall future.
Yeah, let me know if you can hear it now. We're trying to stream the earnings call for Lyft right now.
Matters. These statements are subject to known and unknown
Let me know if it's clear.
Uncertainties that could cause actual results to differ materially from those projected or implied during this call. In particular, those described in our risk factors included in our Form 10-Q for the third quarter of 2021, filed on November 4th, 2021, and our Form 10-K for the full year 2021 that will be filed by March 1st, 2022, as well as the current uncertainty and unpredictability in our business, the markets, and economy. We should not rely on our forward-looking statements as predictions of future events. All forward-looking statements that we make on this call are based on assumptions and beliefs as of the date hereof, and Lyft disclaims any obligation to update any forward-looking statements except as required by law. Our discussion today will include non-GAAP financial measures. These non-GAAP measures should be considered in addition to and not as a substitute for or in isolation from our GAAP results. Information regarding our non-GAAP financial results,
is going to be the top left chart. We'll see how it reacts.
GAAP to non-GAAP results may be found in our earnings release, which was furnished with our Form 8K filed today with the SEC, and may also be found on our investor relations website. I would now like to turn the conference call over to Lyft's co-founder and Chief Executive Officer, Logan Green. Logan?
Thanks, Sonia. Good afternoon, everyone, and thank you for joining our call.
Here's your coffee.
2021 was a big year for Lyft.
But this is how you
The operating environment improved as people got vaccinated and communities reopened. As a business, we strengthened our financial position and continued investing in growth initiatives. We also expanded our industry-leading autonomous vehicle partnerships and set ourselves up to win that long-term transition. I'm proud of the team for what we've accomplished together, and I'm excited to build on our momentum. Let me take a moment to welcome our new CFO, Elaine Paul.
Bullish or bearish on Lyft?
Joined our leadership team. Her expertise building best-in-class disruptive businesses is essential as we enter our next phase of growth. Elaine has already had a big impact in her first month. She's brought incredible energy to the team. She's diving deep on the details, and she's identifying opportunities to build more scalable systems and processes. Elaine will review our financial results and share our outlook shortly. Brian Roberts remains an advisor to Lyft until June. Brian's contributions over 7 years here have been exceptional. He helped build our business and the industry. We're grateful to Brian for his leadership and wish him continued success. Turning to Q4, we had a solid quarter and ended 2021 in a stronger position. Rideshare rides in the fourth quarter reached a new COVID record, and we achieved revenue growth of 70% year over year. Revenue per active rider, contribution margin, and adjusted EBITDA reached new highs, supported by supply improvements and ride growth. For the full year, we grew revenues by 36% versus 2020, and we were adjusted EBITDA profitable on an annual basis for the first time. Another key milestone for our business.
You said
supply
36%?
Growth led to better service levels in our marketplace. Total active drivers in the fourth quarter grew by 34% versus Q4 last year, and drivers continued giving more rides on average than they did in 2019. New driver activations were also strong, up nearly 50% year over year. And between Q2 and Q4 of 2021, ride ETAs improved by roughly 30% across all of the markets we operate in. We'll continue working hard to deliver the best possible experience for riders and drivers. Let me talk about Q1. In January, the Omicron variant had a significant impact on ride volumes. The rapid surge in infections was correlated with reduced demand for rideshare. However, since the spike in the US is now peaked, we expect demand will begin to recover. In fact, in the last week of January, we saw a pickup in rideshare rides that we see as a positive signal. Ultimately, given the expected impact of Omicron on Q1 and the unknown shape of the recovery, which could carry into Q2, our near-term revenue growth acceleration will likely be affected. On our last earnings call, we said that we expected revenue growth for full year 2022 to accelerate versus 2021. We're cautiously optimistic that this will continue to be the case. The demand rebound is a matter of when, not if. We're getting better and better at managing these temporary COVID-related spikes, right here, top left. And this time around, driver supply has remained healthy. So when we come out of this period, we expect to be very well positioned. Now let me turn the call over to Elaine.
So you see how it spikes when he says that?
And good afternoon, everyone.
Investors are listening to this.
Let me start by saying, my first month at Lyft has been incredible. I've spent a lot of time diving into the details of our business and engaging with the leadership team on key growth initiatives. I joined Lyft because of the people, the mission, and the significant potential that I saw. 1 month in, I'm even more exhilarated by this company and our opportunity. There's a lot of exciting and important work to do, but a few things are already very clear. The business fundamentals are strong, and there is a lot of runway ahead. We will build a much larger company as we attack the massive addressable market in front of us. I'm looking forward to having a transparent relationship with our investors, analysts, and other key stakeholders. Now, let's talk about Q4. Rideshare rides in the fourth quarter reached a new COVID high.
Okay.
October, with Halloween, was the strongest month. As expected, November and December ticked down from October, but rideshare rides in both months increased by more than 30% versus last year. On the supply side, we were pleased to see the continued impact of our investments and signs of organic tailwinds. Active drivers reached a COVID high in the fourth quarter, and new driver activations remained robust, up nearly 50% in Q4 versus last year. By growing supply, we were able to support an improving marketplace balance and a higher volume of rides. As a result, we reported Q4 revenue of $970 million, up 70% year over year, and exceeded our guidance range of $930 to $940 million. For the full fiscal year, we achieved revenue of $3.2 billion,
$3.2 billion,
of 36% versus 2020. The number of active riders in Q4 increased by 49% year over year to 18.7 million. New rider activations increased by 42% over the same period. On a sequential basis, active riders declined by 1 percentage point. Keep in mind, bike rides reached an all-time high in Q3, and there are some riders who only use bikes and scooters that we lose in colder weather. Revenue per active rider in Q4 reached a new all-time high of $51.79. This is an increase of 14% versus Q4 20.
Okay, so they're making more money.
A larger mix of longer, higher revenue rides and improving service levels.
Yeah,
the airport use case continues
a lot of revenue.
Recover, with airport rides in Q4 21 more than doubling year over year. Before I move on, I want to note that unless otherwise indicated, all income statement measures are non-GAAP and exclude stock-based compensation and other select items as detailed in our earnings release. A reconciliation of historical GAAP to non-GAAP results is available on our investor relations website and may be found in our earnings release, which was furnished with our Form 8-K filed today with the SEC. Contribution margin in the fourth quarter was 59.7%, which represents a 4.2 percentage point increase from Q4 of 2020 and exceeded our outlook of 59%. The outperformance on revenue and contribution margin relative to our guidance helped drive strong Q4 contribution of $579 million. As a reminder, contribution excludes changes to the liabilities for insurance required by regulatory agencies attributable to historical periods. In the fourth quarter, there was adverse development of $122 million net of reinsurance, which we attribute to the continued impact of COVID on legacy insurance claims, specifically higher healthcare and vehicle repair costs. Inflationary pressures being seen across the economy are also broadly affecting the auto insurance industry. To be clear, virtually all of our Q4 adverse development is associated with a legacy third-party claims administrator. The related claims, which date back to 2018, also predate the risk transfer structure that now exists. It's
bullish or bearish
on
Lyft? Let me know.
Of adverse
Right in
development is net of our reinsurance coverage, which offsets claims in excess of the deductible. As a reminder, for the current insurance policy year, we've transferred a significant majority of our auto insurance risk to best-in-class carriers, so we retain less surface area if inflationary pressures persist. Let's move to operating expenses. Operations and support expense for Q4 was $104 million. That represents 10.7% of revenue and is down from 16.4% last year, a 570 basis point reduction year over year.
So they're saving money.
Is a reflection of operational efficiencies and leverage against top line growth.
That's great.
R&D expense in Q4 was $100 million, down approximately $30 million year over year, reflecting a full quarter impact of the sale of our Level 5 self-driving division, which closed in Q3. As a percentage of revenue, R&D expense declined to 10% in Q4 from 23% in the year-ago period. Q4 sales and marketing was $113 million, 12% of revenue, down from 14% last year and roughly flat with Q3. Within sales and marketing, incentives were just 3% of revenue. G&A expense in Q4 was $217 million. That represents 22% of revenue and is down 11 percentage points versus Q4 of last year.
Okay, so
with the leverage largely driven by top line growth.
nice. So they're doing
the
good.
Bottom line, our Q4 adjusted EBITDA profit of $75 million was in line with the top end of guidance, which was between 70 and 75 million, and an 11% improvement versus Q3. We ended 2021 with unrestricted cash equivalents, and short-term investments of $2.3 billion.
Wow, that's great news.
Before I move to our outlook, it's important to note that COVID trends are impossible to predict with any certainty. Future conditions can change rapidly and may affect our guidance. With that, let me share our current outlook.
So
As Logan mentioned, Q1 is being impacted by Omicron. For context, prior to Omicron, we were anticipating strong sequential rideshare ride growth in Q1. This was based on the demand trends we saw in Q4. However, given the impact that Omicron has had on rideshare volumes, we now anticipate rideshare rides will be down slightly in Q1 versus Q4.
Right.
In addition, the first quarter of every year always has rideshare ride mix headwinds with shorter rides and less use of bikes and scooters. Given these factors, we expect revenue in Q1 of between $800 and $850 million. This implies year-over-year growth of 31 to 40%. On a sequential basis, this outlook suggests a decline of 120 to 170 million in revenue versus Q4, or 12 to 18% quarter over quarter.
They're going to decline about 12 to 18% in this next quarter, they think.
We expect Q1 contribution margin to be approximately 56.5%. We expect Q1 adjusted EBITDA will be between $5 and $15 million versus the $75 million in Q4. This assumes a sequential headwind of approximately $65 million to adjusted EBITDA versus Q4 that is driven by the quarter-over-quarter revenue decline.
Lyft tanking.
Let me take a moment to address driver supply. We are pleased with the improvements we've seen over recent quarters, and we continue to believe the most severe period of dislocation is behind us. Driver supply so far in Q1 has been resilient, and the marketplace has reached an improved balance, partially due to softened demand. We remain confident in our ability to manage this issue as we progress through the year. Turning to the full year, we expect the impact of Omicron on Q1 and the unknown pace of the recovery, which could weigh on Q2, will affect our near-term revenue growth acceleration to some extent. For full year 2022, we are cautiously optimistic that we will grow revenues faster than the 36% achieved in 2021. We expect this growth for a few reasons. First,
and this is why they're dropping.
Q4 21 were the highest they've been since COVID started, but we're still more than 30% below the Q4 19 level. Second, the other side of the Omicron wave will likely
I'll stream the Corsair earnings call as well. Demitar. I got you, bro. I'll stream it.
We have seen pent-up demand for mobility that gets released when people have the chance to get moving. As people can go out safely and have more places to go, whether to bars, restaurants, sporting events, or concerts, that's exactly what they do. To sum things up, first, we had a solid fourth quarter and ended 2021 in a much stronger position relative to where we were at the start of the year. Second, we are confident in our ability to navigate near-term headwinds and position ourselves for recovery and demand.
Confident.
Third, and most importantly, we are going to build a much larger company by attacking the market opportunity in front of us.
Looking to build a larger company.
We continue to see exciting opportunities to lean into growth, to deliver solutions that serve and expand our addressable market. We are also committed to disciplined capital allocation and to improving our profitability over time. Our investment decisions will continue to be guided
All right, so
by
we're
our
going to
financial
switch
North Star,
to
which is
the,
to maximize long-term free cash flow.
we're going to switch to the
growth per share.
Corsair.
With that, let me turn it over to John to provide key updates on the business and our strategy.
All right, let me see. So that's the, that was the Lyft. It looks like we're still waiting for the Corsair one. I don't think it's supposed to start. Let me check one more time. Yeah, we're still waiting for the Lyft. So we'll keep this Lyft one going. They might be saying some other stuff, so I'll go ahead and play it back.
Innovation stack. I'm going to address each and explain how they matter. First, we will accelerate our core by continuing to introduce solutions that allow us to grow riders and increase ride frequency. The airport use case is a great example. We are working hard to improve the entire day of travel experience to deliver the most value to Lyft riders. To that end, we recently launched our expanded Delta partnership with an exclusive set of features. Since 2017, Lyft riders who've chosen to link their SkyMiles account have earned more than 2 billion SkyMiles while riding with Lyft. Now Lyft riders can also access real-time Delta flight information in our app. This means riders can stay up to date on their flight status with access to terminal and gate information directly in the Lyft app. This is a first of its kind experience, only available through Lyft, to simplify our riders' journey and give them access to information they can use to make decisions about their travel.
So a new feature.
The partnership has already been impactful, and early consumer feedback has been very positive. Second, we are working hard to expand emerging and new products, including our bikes, scooters, rental cars, and vehicle services. These products are valuable on a standalone basis, but as part of our network, they deliver compounding value, serving as additional entry points to our network, facilitating cross-platform usage and making our network more sticky. Consider that in each quarter of 2021, the number of riders using our bikes and scooters, in addition to rideshare, consistently grew faster than rideshare-only riders.
Lyft has bikes and scooters?
For bikes
Somebody educate me here.
2021 was a record year for rides, with volumes up more than 40%
in the
versus
metropolitan
2020.
centers.
Yeah.
You know,
In fact,
like probably
in
in the city.
2021, City Bike in New York was the 25th most ridden transit network in the United States. To put this in context,
Yeah, think about it. They have like a
more
station
people
where they
took
have the
rides on
bikes and
city
they have
bikes
another
than
station
on
somewhere
bus,
else you could drop
the
them
Bay
on.
Area's
Yeah.
regional transit system.
I didn't know that was Lyft though.
And as a reminder, in
Makes
most of
sense
our
that it would
markets,
be.
we have
Yeah.
agreements with the city to be the exclusive bike share provider. We will continue to invest in these systems, expanding our physical footprint and upgrading the infrastructure, as well as adding charging capabilities to our docking stations, which can improve both uptime and cost.
I didn't see
Our
EPS.
corporate bike share sponsorships, which includes Citibank in New York, Nike in Portland, and MasterCard in the Bay Area, among others, generate revenue and demonstrate these systems' significant inherent value.
Okay.
Let me spend a moment on Lyft Rentals, which is simplifying the rental car experience for consumers. There are two parts to our strategy. One is our first-party rentals, where we own the full stack experience. And second is our third-party nationwide integration with Sixt, which makes finding, reserving, and getting to and from a Sixt rental lot easier than ever.
Lyft scooters, kind of like Bird.
Reservations for our first-party rentals doubled in Q4 21 versus the prior year. This is a reflection of the focus we've put on building out our offerings and making them more discoverable by our riders. Our third-party integration has also been very successful, driving nearly
Are y'all
half
staying
of all
for?
rental reservations booked through our system.
Wow, that's actually
Looking
impressive.
ahead, we expect to continue to grow Lyft Rentals by optimizing our first-party footprint and evaluating new partnership opportunities to add more national coverage. Our third focus in 2022 is investing in our innovation stack. This refers to the R&D investments we're making and all of the work we're doing to advance the technology that underpins our entire network. One great example is Lyft Maps, our in-house mapping platform specifically built for our transportation network. We're building Lyft Maps to be able to optimize the entire Lyft experience. This includes tapping into data collected from Lyft rides to detect street closures and traffic delays, and using that information to improve our overall routing capabilities. We can also optimize pickups and drop-offs to save drivers time, help position them for the next ride, and avoid unnecessary tolls. We began rolling out Lyft Maps last year in select markets, and it has already powered more than 3 million rides. We are also partnering with Google to make the Lyft app and our proprietary mapping platform available on car displays that have Android Auto. This integration has been highly anticipated by our driver community and a frequent top request.
But in 8 minutes, we're switching to the Corsair call.
Rides, it's easy to see why this is so helpful. Many drivers end up with multiple phones on their dashboards or other complicated setups to try to achieve the same outcome. Launching this summer, we expect the integration to make it easier for drivers to accept rides and to improve the overall rider and driver experience. And we'll continue working to accommodate other platforms to alleviate this pain point more broadly. Our investments in our network's innovation stack with advancements like Lyft Maps add value today and help us build critical infrastructure and capabilities for the future. This becomes clear as you look at the work we're doing with autonomous vehicle partners. The Lyft network is a continuously improving product stemming from a decade of engineering investment and billions of real-world rides. As a result, AV providers are increasingly working with us to help advance and commercialize their technology. The latest proof point is the launch of our autonomous rideshare service along with Ford and Argo AI in Miami. Ford's AVs are powered by the Argo self-driving system and can be dispatched, matched, and routed to Lyft riders. This is the first time AVs are available for ride sharing in Miami.
Top left or top right
we
for
expect
AMC
this
right here.
partnership to scale to 1,000 vehicles across multiple markets by 2026. For every additional component we add to our network, we continue to see more and more compounding benefits. Operator, we're now ready to take questions.
All right, so here's the question section.
Sure. Ladies and gentlemen, if you have a question at this time, please press star 1 on your telephone keypad. If your question has been answered or you wish to remove yourself from the queue, press the pound key. We kindly request to limit your questions to 1 and 1 follow-up. Your first question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Thanks for taking the questions. Just when you think about potentially accelerating growth above 36% in 22, how are you thinking about the mix of active riders and then revenue per active rider? And then just on driver supply, I know you said it's more stable through Omicron. How are you feeling about the overall driver supply levels just relative to increasing demand as you go through the year? Thanks.
Yeah, so this is Logan. I'll jump in. Our core focus is taking care of our customers. So we are most focused on providing the best possible customer experience and ensuring great customer experiences lead to great retention, lead to more rides. So that's our core focus. We are additionally always looking at and investing in planting new seeds to expand the number of use cases for using Lyft. And you've seen us expand. We launched a really innovative product last year called Priority Pickup. So when somebody is in a rush, and we have the ability to dispatch a closer driver, we're providing a really magical experience with our Priority Pickup product. Now it comes at a premium, so it's perfect for the moment where those few minutes really matter, but it's a really special experience when it works. And we're expanding outwards into different use cases, such as what John was talking about with rentals.
Yeah.
So that Lyft can be top of mind for any kind of transportation trip that somebody's planning. So we additionally are always focused on activating new riders. So every year 4 million people in the US turn 18. And so we have a lot of investment and energy always on in terms of providing a reason for somebody to use Lyft for the first time. We're both focused on kind of expansion of the active rider pool and driving more revenue per active rider. In terms of the second part of the question on supply, Elaine, you want to jump in?
Absolutely. Thank you, Logan. Hi, this is Elaine.
All right, so
in terms of driver supply,
Corsair is supposed to start in 3 minutes.
Demand dynamics in our marketplace have certainly been improving. Total active drivers reached a COVID high in Q4, and new drivers grew nearly 50% year over year in Q4. Even in Q1, despite softened demand, driver supply has been resilient. We've seen early signs of organic driver supply growth. As some context, don't forget, the enhanced federal unemployment benefits sunset in September, and the child tax credit rolled off at year end. So there are folks who want to get back out and earning money.
Right.
As rideshare demand rebounds, we may see people shift from delivery to rideshare, where the earnings tend to be higher based on historical studies, although exact comparisons are difficult. We're confident in our ability to manage supply, and we feel very well positioned for the recovery in demand.
Great. Thank you both.
All right.
Thank you.
All right, guys. So we're gonna go ahead and end the Lyft
Your
call.
next question comes from the line of
Prepare for
Stephen
the Corsair earnings call, which is supposed to be in 5 minutes.
Thank you so much. So, Logan or John, I think there's a percent.
All right, so we're gonna go ahead and end that one, and then all right, we're still on hold for Corsair. But are y'all bullish or bearish on Lyft after that? I mean, they had pretty good numbers. They do have a little bit of a weak outlook for the first quarter of this year, and so their outlook is a little bit weaker. ENPH flying up, AMC ripping up as well. So their outlook is a little bit weaker. But they think that driver supply issues are going to settle. They made a lot of cash last year. They're sitting on a decent amount of cash, and so and
you have to wonder too what the car market kind of
right.
how that plays into.
I don't think that really affects it that much. I think that if it's going to affect them, it's because people are selling their car, but I think that driver supply will be fine. I don't think that's going to affect it drastically. I think that
for the cost, repair costs. I mean, I don't know how that.
I think that a lot of people. I think if Lyft has an issue, this is it. All right. I think that what you really got to think about is the dynamic of people joining Lyft and joining rideshare companies like Uber to drive for them and to ride with them, and then getting tired of it and then quitting to go do something else. I think people have. I think over the next 10 years, we're going to see Lyft and Uber fly. I'm very bullish long term because I think that they have fundamentally changed our culture here in the U.S. to where
it's never going to go away.
It's never going to stop. The Uber and Lyft are going to be around for forever, I'm sure. I don't know about forever, but they're going to be around. People at this point in time, it's changed the culture enough to where people sell their car and they just take Lyft and Uber everywhere. And so it's fundamentally changed.
And it's a necessity too. I mean, with some things, especially like, John and I, if we want to go out for like a date night, it's almost easier just to Lyft somewhere I guess as long as you're not out in the country, if you're near a city center,
Right. Yeah, for sure. And this guy, he said you have to look at competition though. True, but the only other competitor is Uber. That's the only other competitor. And so it's Uber, Lyft. And even if Uber is more profitable than Lyft, or even if Uber gains more namespace.
First, right?
I don't know. I think Lyft was actually first. I'm not sure which one was first. We're waiting for the Lyft call or we're waiting for the Corsair call now. We're still sitting on hold. We're waiting for it. So we're just kind of sitting here waiting for it. It's supposed to start right now. But we're just kind of sitting on hold for Corsair. So we'll let you guys know when the earnings call starts. They're basically break even now. Let me make sure I'm spelling Corsair right. Corsair earnings call has not started yet. Should start soon though. But yeah, I think that they only have one other competitor, and that's Uber. And I think even with that, they're still going to be fine. All right, here's PTON. PTON at 37.80s, ripping up. Honestly, I'm really happy to see that. Snap as well. My call option on Snap. Lyft was another company prior to Uber, I believe. Yeah, I mean, we're already talking about PTON. We've been talking about PTON all day. No name. To where we live streamed this morning, talked about it. But I think that if they do have any type of competition, it's going to be robo-taxis with Tesla. It's going to be people. It's going to be cars, self-driving vehicles.
Eventually,
Thank you, sir.
All right, so here's the Corsair call. So we got the call live.
Thank you.
Good afternoon, everyone, and thank you for joining us for Corsair's financial results conference call for the
Let me know if it's
fourth quarter
clear.
ending December 31st, 2021. On the call today, we have our CEO, Andy Paul, and CFO, Michael Potter. Before we begin, allow me to provide a disclaimer regarding forward-looking statements. This call, including the Q&A portion of the call, may include forward-looking statements related to the expected future results of our company and are therefore forward-looking statements.
Good.
Our actual results may differ materially from our projections due to a number of risks and uncertainties. The risks and uncertainties that forward-looking statements are subject to are described in our earnings release and other SEC filings. Today's remarks will also include references to non-GAAP financial measures. Additional information, including reconciliation between non-GAAP financial information to the GAAP financial information, is provided in the press release. I would also like to remind everyone that until our 10-K is on file, Q4 2021 numbers are preliminary. This conference call will be available for replay via webcast on Corsair's investor relations website at ir.corsair.com.
Sure, Marco.
We will
I got
begin
you,
with our fourth quarter business highlights and a discussion on what we're seeing in the market, and Michael will then take you through a review of the financials and our outlook before we proceed to Q&A. With that, I'll now turn the call over to Andy.
Thank you, Ronald, and welcome everyone to our Q4 2021 earnings call. We're pleased to report that for the fourth quarter, revenues were $510.6 million at the high end of our guidance, resulting in a record $1.9 billion for 2021, 11.8% growth over 2020. Gross profit for the quarter came in at $121.8 million and a record $513.9 million for the year. We accomplished this as the world started to move towards a post-pandemic environment, and for the second half of 21, outside entertainment had mostly opened back up and shelter-at-home guidelines had generally been relaxed. Throughout 2021 and continuing today, we continue to be in a challenging supply chain environment. And based on feedback from our customers, we believe that the market for self-built gaming PCs continues to be constrained by the shortage of high-performance graphics cards.
Yep.
Michael will walk through
Microchip
more of our
issues.
financial results in greater detail later in our call and address some of the questions we received at our Investor Day related to 2021 and short-term business conditions, which we were unable to address at the time. It was our first ever Investor Day as a public company, and we received quite a bit of positive feedback. If you've not yet had a chance to listen to the recording, I'd encourage you to do so. I'll now take a moment to recap some of the highlights of our Investor Day. We outlined 3 pillars of our growth strategy, which I'll quickly repeat now. Firstly, the gaming and creator market continues to grow quickly, and gaming hardware is growing much faster than gaming software revenue as consumers start to become more competitive and want to buy better PCs and peripherals. The creator market is exploding as video interaction becomes the norm.
Yeah,
Secondly, we continue to take market share in most categories. This was highlighted by the fact that in the markets we track from external sources, we have #1 market share in almost every category of components that we sell that allow gamers to build high-performance gaming PCs. And we're in the top 3 in almost every peripheral category.
Yeah, I believe that.
Thirdly, that we continue to enter new categories by both organic development and by acquisitions. And in the last 18 months, we have entered 3 large new markets: microphones and cameras for content creators, and monitors for both gamers and content creators. We also showed our internal goals of reaching $3.5 billion of revenue by 2026. During 2021, we launched 141 new products, and we have increased our number of product lines to 30.
So 30 product lines.
We have several examples of how new products and innovative marketing is helping us grow our direct-to-consumer business. In November, we kicked off our Corsair Collections product line with the Flavor Rush series of our K65 RGB 60% mechanical gaming keyboard. This was a fun, colorful, custom, and limited release, providing unique and deeper personalization for our most engaged customers. The 60% keyboard has been quite a success in the market since we released it early last year, and the Corsair Collections are exclusive to our Corsair web store in North America. In December, we introduced our long-awaited PlayStation 5 controllers, the SCUF Reflex series. With price points ranging from $199 to $259, the Reflex, Reflex Pro, and Reflex FPS use our patented remappable paddles, and these adjustable controls give players the edge in most competitive games. The customer demand was simply incredible, and we saw our initial launch stock sell out in minutes.
It's got bumpers on the back.
The Reflex series of controllers are currently available exclusively on our SCUF website.
It's pretty cool.
And in our overall retail channel, we launched our new line of DDR5 memory products, as well as gaming systems using DDR5.
$260.
DDR5 is the latest technology standard for DRAM, and we are currently shipping kits with speeds up to 6400 megahertz. Both Intel and AMD are supporting this interface on the latest processors, which helps dramatically improve system performance. Overall, demand has remained strong for gaming components and gaming peripherals. In fact, recent market data shows consumer demand for peripherals at close to the elevated 2020 work-from-home levels. As I mentioned before, the semiconductor shortage has caused graphics cards to be in very short supply compared to demand.
Interesting.
And has driven market pricing of certain graphics cards to 150 to 200% of normal MSRP. This has caused gaming enthusiasts to hold back on building new high-end gaming PCs that use our components. By our estimate, approximately 10% of the natural demand for our components and memory products in our gaming components segment was held back in 2021. We believe this should cause a bubble of pent-up demand, which will be released as GPUs return to normal MSRP in 2022.
Okay.
So in closing, after the extraordinary growth in 2020 caused by gamers spending more time at home gaming and the large growth in the creator economy, we're pleased to see that after lockdowns and shelter at home were lifted, our Q4 21 net revenues were within about 8% of Q4 20. Despite the ongoing logistical and supply chain challenges impacting markets, including the lack of availability of reasonably priced GPUs in the retail channel, we experienced healthy growth over 2020 in both our operating segments.
Basically, they profited from the pump in GPU prices.
Our peripheral segment grew 20% year over year, demonstrating the underlying secular growth trends in the overall gaming, esports, content creator, and streaming hardware and services market. We remain focused on expanding our presence in the market and are well positioned to continue to gain market share. We remain pleased with our fiscal year 21 results and the positive momentum we have retained in the overall business into 2022, which provides us confidence in achieving our full year and longer term outlook. We have an exciting growth potential and plenty of market share to capture. Thank you for your time and continued support. I'll now turn the call over to Michael to discuss our financial results for the quarter.
All right, so yeah, I mean, basically they're profiting from the GPU price increase, and they're, understandably.
As we release both quarterly and annual results, so please bear with me. In Q4, we delivered net revenue of $510.6 million, though a decrease of 8.2% compared to our record $556.3 million in Q4 2020. It remains well above Q4 2019 pre-pandemic level of $326.6 million. Net revenue for the year was $1,904 million, an increase of 11.8% year over year. As Andy mentioned earlier, our fourth quarter results, and really the whole second half, remain challenged by a very difficult logistics and supply chain environment. Logistics remains slower than usual, with many shipping lanes taking over double the normal shipping times and at a much higher cost. We estimate that the effect of increased supply chain costs continues to have a 2 to 3% headwind on our gross margin and resulting EBITDA percent during the fourth quarter, and we expect this to continue in the upcoming quarter. Ocean freight of 40-foot containers remains elevated compared to historical prices, but we did see some slight easing at the end of 2021 fourth quarter and expect somewhat better rates for 2022. Turning now to our segments. The gamer and creator peripheral segment provided $176.9 million of net revenue during the fourth quarter, impacted by supply and logistics constraints, a decrease of 7.8% from $191.8 million in Q4 2020, and well above Q4 2019 of $94.1 million.
Yeah, Corsair.
The gamer and creator peripheral segment net revenue contributed 34.6% of total net revenue, an increase of 10 basis points from 34.5% in Q4 2020. For the year, gamer and creator peripheral segment net revenue was a record $647.2 million, an increase of 20% year over year.
Okay, so
the gaming components and systems segment provided $333.7 million of net revenue during the fourth quarter, a decrease of 8.4% from $364.5 million in Q4 2020, primarily driven by a shortage of reasonably priced GPUs and supply and logistics constraints, and well above Q4 2019's level of $232.5 million. Just over half of this revenue came from memory products,
dope, Ali B,
which contributed $176.8 million. For the year, net revenue was $1,256.9 million, an increase of 8.1% year over year. Gross profit in the fourth quarter decreased by 20.8% to $121.8 million from the record $153.8 million in Q4 2020, and is well above the Q4 2019 pre-pandemic level of $70.5 million. The decrease over Q4 2020 was primarily increased logistics costs, a return to more normal seasonal promotional activity, and reduced revenues. Gross profit margin was 23.9%, a decrease of 370 basis points from 27.6% in Q4 2020, mainly due to significant increases in logistics costs, especially ocean freight and promotion activity. For the year, this was a record $513.9 million, an increase of 10.4%. The gamer and creator peripheral segment gross profit was $52.8 million, a decrease of 23.3% from $68.9 million in Q4 2020, primarily driven by a decrease in revenue in the same periods, increased supply chain and logistics costs, and a return to more normal pre-pandemic level of holiday promotions. Gross profit margin was 29.9%, a decrease of 600 basis points from 35.9% in Q4, largely due to the previously mentioned supply chain and logistics costs and rebate levels. For the year, gamer and creator peripherals segment gross profit was $224.9 million, an increase of 18.5%, and a record 43.8% of total gross profit. This continues to be a great overall story and a formula for overall margin expansion, as our fastest growing and highest margin segment also sits in our largest growth market. The gaming components and systems segment gross profit was $69 million, a decrease of 18.8% from $84.9 million in Q4 2020, primarily driven by the decrease in revenue in the same periods and increased logistics costs. Gross profit margin was 20.7%, a decrease of 260 basis points from 23.3% in Q4 2020, primarily due to freight costs. Memory products margin in this segment was 17.5% for the quarter. For the year, gaming components and systems segment gross profit was $288.9 million, an increase of 4.8%. Fourth quarter SG&A expenses were $81.5 million, a modest increase of 0.5% compared to $81.1 million in Q4 2020, primarily driven by an increase in outbound freight costs due to increases in ocean and air freight, offset by a decrease in volumes due to lower revenue and an increase in personnel-related expenses. Fourth quarter product development expenses were $15.1 million, an increase of 9.9% compared to $13.8 million in Q4 2020, primarily driven by an increase in personnel-related expenses as we continue to focus on bringing an increasing number of products to the market.
So not good for their margins,
Operating
really.
income in the fourth quarter of 2021 was $25.1 million, a decrease of $33.8 million from $58.9 million in Q4 2020. For the year, this was $137.9 million, a decrease of $20.5 million from $158.4 million in 2020. Adjusted operating income in the fourth quarter of 2021 was $38.5 million, a decrease of $32.6 million from $71 million in Q4 2020. For the year, this was $194.5 million, a decrease of $10.3 million from $204.8 million in 2020. Fourth quarter net income was $24.7 million, or 25 cents per diluted share, as compared to net income of $43 million, or 43 cents per diluted share in Q4 2020. For the year, net income was $101 million, or $1.01 per diluted share, compared to $103.2 million, or $1.14 per diluted share in 2020. Fourth quarter adjusted net income was $34.7 million, or 35 cents per diluted share, as compared to adjusted net income of $53 million, or 53 cents per diluted share in Q4 2020. For the year, this was $144.9 million, or $1.45 per diluted share, compared to $145 million, or $1.60 per diluted share in 2020. Adjusted EBITDA for Q4 2021 was $39.5 million, a decrease of $33 million compared to $72.5 million in Q4 2020, resulting in adjusted EBITDA margin of 7.7%, a decrease of 530 basis points from 13% in Q4 2020. Adjusted EBITDA for the year was $199.2 million compared to $213 million in 2020.
Okay.
Turning now to our balance sheet. As we discussed in our Q3 earnings call, in order to mitigate logistics delays, we strategically put more inventory in our hubs closer to our markets. This certainly paid off as reflected by our sequential growth over Q3, but we did pay for much of this inventory last year and have not collected in all the sales, resulting in an increase in our net working capital and a relatively low AP balance compared to our inventory. As funds come in during Q1 22, net working capital will return to more normal levels. During 2021, we paid off over $78 million in debt, refinanced our remaining long-term debt to more favorable terms in Q3, saving over $8 million in interest expense per year, and increased our revolver capacity to $100 million, which was unutilized at the end of the year. We ended the year with $248.8 million in debt at face value and $62.4 million of unrestricted cash and a net leverage ratio below 1. We continue to look for strategic opportunities to use the cash we generate, such as our recent investment in iDisplay. Barring such opportunities, we look to continue to reduce our debt. The last 2 years marked our transformation of a relatively leveraged LBO to a comfortably leveraged growth company. We're comfortable with our current debt levels and will value growth investments over debt reduction, but we do expect to continue to reduce debt.
Okay. So they basically said that they're going to move towards growth, but they'll also
2022 we expect total revenue in the range of $1.9 billion to $2.1 billion, representing growth of approximately 0 to 10%. Adjusted operating income in the range of $195 million to $215 million, and adjusted EBITDA in the range of $205 million to $225 million. For 2022, we were expecting an approximately 45%, 55% revenue split for the first half and second half. We expect supplies of reasonably priced GPUs to be more available as the year progresses, thus unlocking the pent-up demand that Andy discussed earlier. Because of the timing of the holiday period in 2021 and Lunar New Year in 2022, we expect greater than average seasonal effect on Q1 revenue.
Okay.
The additional modeling details
But what does that mean?
underlying
Good or
our
bad
outlook remain
effect?
largely the same as we've discussed in our prior earnings calls. For ease, I'll repeat them.
A little vague.
We expect gross margins to remain pressured by logistics costs, especially in the first half of the year. Operating expense will increase to support our higher revenue level and our continued investment in new products. Assuming no further debt paydown, we expect interest expense of approximately $1 million per quarter. The $4 million patent trial win in Q1 2021 is not in our outlook. This amount could vary depending on what the judge rules, is subject to appeal, and the timing of recognition of a gain, if any, is uncertain at this time. An effective tax rate of approximately 21 to 23% for 2022, and a full year average weighted diluted shares outstanding of approximately 100 to 102 million shares. To summarize, we're pleased with our strong financial performance to conclude 2021, with fourth quarter revenue and profitability metrics achieving the high end of our expectations. We remain focused on growth following the transformation of our debt levels and cost management efficiencies over the past few years. As we begin 2022, we expect to continue to experience elevated freight costs and ongoing supply chain issues, but we currently believe these circumstances will ease as the year progresses. As these macroeconomic conditions improve, we expect to increase our cash position, which should allow us to execute on M&A opportunities that fulfill our investment criteria or further reduce debt. With that, we're now happy to open the call for questions.
All right, so
Operator, will you please open up the line for Q&A?
I know it's definitely not as good as they were expecting.
We'll
they expect elevated freight and supply issues for 2022. If you'd like to ask a question,
please press star 1 on your telephone
high
keypad.
operating expenses.
A confirmation tone will indicate your line.
They expect interest expenses of about $1 million per quarter and a 21 to 23% effective tax rate for 2022. 100 to 102 million shares is what they're expecting. And they expect, again, elevated freight and supply issues during 2022. So, not the big bullish report that a lot of people wanted or expecting.
Comes from Drew Crum with Stifel. Please proceed with your question.
It's not surprising.
Okay,
yeah.
Thanks. Hey guys, good afternoon.
Everybody's struggling from
Andy,
inflation.
You mentioned launching some products tied to DDR5 during 4Q. Can you comment on how those have performed to date and what your expectations are for 2022? How material are these to your forecast? And then separately for Michael, the business experienced a little bit of gross margin slippage in 21, as you highlighted, and you mentioned some expected pressure in the first half. Just wanted to confirm that you're assuming gross margins for the year improve, and whether or not you think 22 gross margin can get back to or exceed where you were in 2020. Thanks.
Peloton.
Okay, so first question was about DDR5. In terms of expectation, I mean, we've sold out of everything that we built.
Peloton was actually the opposite.
So the way to think about this is the semiconductor fabs that make memory chips will gradually move from DDR4 to DDR5. I think next year, maybe 20-25% of their capacity will move from DDR4 to DDR5. Because the sort of people that are buying our components and the sort of machines they're building tend to be, higher end and people want the latest performance.
See us swerving.
There's a much higher demand. I think, everybody, if they could spend a few more dollars, would go with the DDR5 platform. And so, yeah, whatever we can get, we get probably an unshare fair of the supply because we have such a high market share now in consumer memory. But yeah, everything we're getting, we're sold out. Now, we're not assuming it's going to be a massive effect. It'll help us a little bit because the ASPs are a little higher on DDR5 than DDR4. And it depends on the percentage, but we haven't really modeled that at the moment as a huge tailwind. And the reason for that is that the overall market for people building high performance PCs is still somewhat limited by GPUs because they're so expensive. and the difference in price in GPUs dwarfs that of DDR5 versus DDR4. So I think the big effect that we're going to have in that side of our business is second half of 22 as GPUs become more widely available. Hope that answers the question.
Yeah, for sure, Angel.
In terms of your question on gross margin, if you look at the ranges we gave for EBITDA, there is a slight improvement if you use the midpoint of the range year over year expected. So we do expect there to be some small improvements in gross margin year over year, and they're going to be weighted more towards the back half of the year.
Got it. Okay, thanks, guys.
Don't forget to subscribe, guys. We're going to do every major earnings call, including Disney and everything else.
Comes from Mario Lu with Barclays. Please proceed with your question.
Great. Thanks for taking the question. Yeah, the first one's a little bit more high level. In terms of the analyst day you guys hosted a couple weeks ago, you mentioned, the long-term revenue goal of $3.5 billion by 2026. So yeah, I think that implies, close to 15% CAGR growth starting in 2023. So just curious, does that, if you could provide more color in terms of if that includes like a breakout year needed to achieve that number, or any drivers that are kind of embedded in that goal? Thanks.
Well, look, what I would say there is that when you do year-to-year comparisons, it's very difficult to do that if you include a year where there was shelter at home. And for the purposes of the analysis, I think you remember in the Investor Day, we showed that from Q2 20 through the end of Q2 21, those 5 quarters were really shelter at home. And clearly now we see that caused a bulge in consumer spending and consumer electronic spending. I mean, that's half the reason that the supply chain is so stressed. Now we're out of that cycle, but remember the first half of 21 was still in shelter at home. So we're not going to see the growth in 22 that matches the CAGR that you're talking about. We should start to see that in 23 and onwards. So what we showed you was that when you look either side of the pandemic and you look at the basic increase in gamers and spend and that sort of thing, that's the sort of growth that you see that would result from market growth plus our market share increases and that sort of thing. So hopefully that gives you the expectation. Now, there's a lot of reason to be optimistic about the second half of 22, right? We've got Intel that's probably going to release graphics cards in the middle of the year. We've got Ethereum mining, which sometime during 22, I think is going to be less profitable, or in fact impossible to do mining the way it's being done now. And I think all of those factors are going to result in much more available graphics cards.
Cheaper graphics card,
affordable as well.
Right.
So we think that's going to spur
cryptocurrencies.
Probably really from late 22, mid to late 22 through 23. I'd expect there to be a lot of demand as people have been waiting for a reasonable price graphics card to start building.
And look up an ant miner.
No, I know, I've seen it.
Yeah, ant miners are like 10K.
And then maybe a follow-up on gross margin
but
improvement.
It makes sense what it does.
Or is there any updates in terms of the D2C strategy that you guys are implementing?
Small miners.
I believe it's up to 11% of revenue now versus 9% a year ago. I guess how's that trending versus your expectations? And are there any other products kind of outside of Origin and Scuf that you're seeing a higher percentage to DTC? Thanks.
These are ant miners,
now that
super
we're
expensive.
Well into the cycle of having a web store team and thinking strategically about it, there's really two things. One is, as we release new products, we think about the web store strategy as we do it. And so, for example, we might launch, let's say, a microphone in the channel, and then in our web store, we might launch a microphone plus pop filter plus shock mount, for example. So we've got lots of ways of differentiating now. The second thing is that, yeah, as you mentioned with Scuf and Origin, most of the M&A opportunities we're looking at that are smaller tend to be direct to consumer, because these days, if you start a new company, it's so easy with Shopify to start your own web store that most people just go in and do that. So both of those two things are going to continue to happen that will drive things up. Obviously, in our base business of components and memory and keyboards and mice, we're not changing too much. So most of that business we expect to stay in the channel.
There's tons of competitors.
The direct consumer is clearly a higher margin business, but it also has costs associated with it. At the moment, we're not trying to aggressively drive customers from the channel to the store. We're more just trying to differentiate between some of the product offerings.
Microsoft doesn't really create gaming accessories, which is what Corsair is. They create headphones, like mics, keyboards. Microsoft
*1 on your telephone.
Well, no, like those who would the company's competitor be besides Logitech?
Yeah, but Affirm earnings are Thursday, Angel. So they're Thursday.
Our next question comes from Tim Nolan with Macquarie. Please proceed with your question. Excuse me, Tim, your line is now live. Please state your question.
Dun, dun, dun.
Sorry, I made the usual sticking on mute mistake. Can you hear me now?
Yeah.
All right, sorry about that. Thanks for taking the question. I wonder if I could push a bit more on the seasonality question. In Q1, you called that out. Looking back, it's a little difficult for us to assess, what your kind of seasonality impacts are, given that you came public during COVID, you've had this big run up, and I've got the supply chain question. And I've heard you on the second half. Hopefully the supply chain issues ease. It's just a little bit difficult to understand kind of how we should be phasing.
We're gonna raise their stock price
for the margins.
I know I didn't really know it either until John typed it in.
Whatever color you're willing to give us, could you please give us?
Everything is a public
company. All right, hold on.
Yeah, so that's a difficult one because we don't want to start guiding quarterly, but I think what we can say is that, as you've heard from all the discussions just now, clearly there's a lot more tailwinds going to happen in the second half of this year.
They're skeptical
than the first half in terms of growth from previous periods, because the first half of last year was a shelter-at-home year.
So basically, they have low expectations for the first 2 quarters of this year.
Chronic shortages and MSRP increases on graphics cards. So that really stops people building, gaming systems. So I think this year, like last year and the year before, is not going to be anything to do with historical seasonal norms. But I would say our internal expectations are that, firstly, that we're more focused this year on comparing with 2020, all right? In other words, 2019 and 20 pre-pandemic, that's what we're looking for now, is to try and gauge, how the market is doing post shelter at home and what the lengthening, the long-term effects are. And the answer there is really good news. But as I said, we're not going to match the surge of when people were stuck at home with nothing else to do.
Yeah, so basically they're skeptical for the first 2 quarters.
Bars, restaurants are open, and around here anyway, they're full.
People aren't going to be home playing games anymore.
That's the first part of it. But yeah, I would say that the message from here is that internally we're assuming that there's going to be a much bigger headwind in the second half than the first because of graphics cards, and also there'll be some easing of freight costs we expect. I'm surprised that hasn't happened already, but we expect that to start going down. That's anything to add. I think that's.
We tried to say expect about 45% first half, 55% second half in total. And I've been here a little bit over 2 years now, and most of it was during the pandemic time. So I haven't seen a normal quarter yet. I did go back in the time with my team because I get asked this question all the time, what's normal seasonality? And, Q1 tends to be down from Q4, but less than 10%. And then Q2 tends to be a little bit up, and then, so a little bit down from there. And then Q3 and Q4 go up.
When Lunar New Year's timing is like it was a little earlier, tends to have a little bit bigger impact on Q1, and that conversely tends to help Q2. Not sure how much that's going to play through with the logistics environment we're in, but that would be more typical. We're more impact on Q1 than normal, but less impact on Q2, based on the timing of the holidays.
Okay, that's actually very helpful because I was trying to go back to prior quarters, and it was just hard to determine a pattern given the information we have, given what's happened in the last couple of years. Could I ask one other numbers question, actually, please, which is about promotion rebate costs? You mentioned those going up.
He's not supposed to.
How much is that related to product?
He's only supposed to ask one question and then a follow-up.
General cost inflation or choosing to market more, and what can we expect on that front?
But it's a good question. So let's see what they say.
I think 22, we'd expected to get back to normal levels. I mean, with the surge that happened in the period I described, right? Q2 20, April 20 through sort of July of 21, there was no need to do any promotions because everything was completely sold out. I mean, I think April, when shelter at home started, pretty much every one of our retailers and e-tailers was sold out immediately.
Yeah, everybody needs.
So I'd expect it to be more normal compared to what we saw in 2019.
So he basically said that he thinks, he thinks the next quarters are going to generally be like 2019.
In terms of percentage, yeah.
Our next question comes from Doug Creutz with Cowen. Please proceed with your question.
Thanks. It's been a bit over a year since you guys acquired Gamer Sensei. Just wondering how that's proceeding, whether it's sort of going according to your expectations, and how maybe your experience with it has sort of affected your interest in other gamer service type acquisitions. Thanks.
Yeah, so we're actually still pretty bullish on the whole space around not just services, but sort of how we engage with the gaming community and how we interact with them. And as we sort of get more engaged with our direct-to-consumer initiatives, this is certainly an important stepping stone. I'd say, as we've gone through the year, there's been a few changes in terms of how gamers are expecting to, do lessons and what's going on in the collegiate environment and that sort of thing. So I think at the top level, we'd probably say still a work in process, still very bullish in the space, but a little different than we initially thought when we went into it.
Okay, thank you.
Our next question comes from Rod Hall with Goldman Sachs. Please proceed with your question.
It's Goldman Sachs.
Yeah, thanks for the question. My first question comes back to the promotional activity, Andy, and the increase there. I'm just curious how close to normal we were in Q4 and when you think promotional activity would be back to whatever the new normal level is. Does that take till the middle of the year? And, what does that mean for, I guess for gross margins the first part of the year? And then I've got a follow-up to that.
Yeah, no, I think Q4 was pretty much at normal levels. I'm looking at our analysts.
The reason why I talked about it when I went through that section is because I was comparing to 2020, to the prior year, where there was almost no promotion activity because that was in the heart of the shelter-at-home period. I think I'd characterize the end of last year, 21, more like a normal promotional type of environment, sort of like in the prior years, 19, 18, and so on. So we didn't see anything wild and out of the ordinary, but certainly compared to the prior quarter, the year before, it was a lot more.
Okay, yeah, that's helpful.
Was this morning,
and then that kind of leads to my second question, which is, you guys are saying gross margins up in 22, which, they were 27% mathematically in 21. So I guess that puts them at 28 in 22, but yet you just printed 24 with normal promotional activity. So it kind of seems hard to get back to 28. And I was wondering if there's any way that you guys could, or, even above 27, can you bridge back to that somehow, help us understand how that happens?
And it's two main elements, Rod. The first is easing of the logistics costs and the entanglement around there. So that will certainly give us a pretty big help. The second part of it is going to be just the continued shift to a higher percentage of our higher gross margin products. They have a higher growth rate. So over time, that should lift the total margin. So between the two of them, we're relatively confident we can increase margins. Obviously, it's difficult to overcome the very high margins at the end of 20 and at the very beginning of 2021 when promotional activity was quite low because of shelter at home. But longer term, we don't see a problem with getting the margins back up.
Right. So you just feel like removal of the logistics and some of these excess costs will kind of help to put those back to where you're thinking. It sounds like not far above 27, if I'm kind of reading between the lines here, though, Michael. Is that right?
I mean, if you look at year over year, the first half of 21 was quite strong. And, we're saying the second half of 22 will be stronger. So we certainly think we'll start recovering and bring it up, but we're not projecting. If you look at the EBITDA ranges and figure we're growing our OpEx, like we said, somewhere probably around where our revenue levels are based on the numbers there and the operating income and EBITDA, you should see there'd be just a slight year-over-year margin increase.
Right.
Yeah, the only thing I'd add is we did have a few things going on in the last few months, related to COVID. Some of our factories in Vietnam were really shut down for a while, and we had to then revert back to sources out of China, which then started affecting us with tariffs. So we did have some unusual costs that were flowing through because of that, and that's generally behind us now. So we're planning next year on essentially being, I won't say done with COVID, but it's ceasing to have the same effect as it did
basically
before.
The COVID
and
struggles
surely, freight costs will drop down. The other thing I just would say is that, the biggest increase in terms of dollars that a PC gamer that wants to build their own PC is in graphics cards. We keep talking about that, but the place where we sell our highest end products is for people that are building $2,500, $3,000 PCs.
Yeah, pro gamers,
and so that's really where
rich
the
people,
biggest sort of
pro gamers
holdback is in builds, because you could be talking about $1,000 increase in a graphics card. So I think that we're being held back on some of our high-end products that normally would yield the highest margins. So, and that should change during the year.
Yeah. Okay. All right. I appreciate it. Thanks for all the color.
All right, guys. So we're going to go ahead and end it there. Let me know if you're bullish on Corsair. Yeah, Carol's learning to trade. I'm teaching her to trade. I'm teaching her really fundamental analysis and a little bit of technicals first. But really, I'm just teaching her how to invest. And that's what she's got to learn first. She's got to learn about float size, market cap, everything like that. Yeah. And so that's what we're teaching her now. Again, if you guys appreciated this, subscribe. We're going to be doing all major earnings release calls here. As long as if they're at the opening bell, or if they're in the morning, we live stream every weekday morning right here on YouTube. So if they're in the morning, we can live stream it, and then we'll trade the market open. We'll potentially trade whatever we are talking about if it's volatile enough. And then if it's in after hours, we're going to be live streaming the entire call uninterrupted like we have been. And so if you appreciate that and you want to see more, a lot of nice people we met today on the stream, hit the subscribe button, hit the notification bell. I appreciate all you guys. And yeah, we'll see you guys tomorrow for our live stream. Again, don't forget to subscribe. We'll be live tomorrow morning, same time as always. And yeah, good luck, guys. We'll see you guys then.
Bye, everyone.
Yeah, fundamentals super important. What percentage are you invested now in the markets? Well, I always invest. Investing is super important. So like I'm invested in DraftKings right now, a bunch of other things, but like I've always been investing. I'm just not open about stuff, but I talk about some stuff that I'm bullish in, like DraftKings. I tend to think that this latest dip was a really cheap dip. Honestly, I'm starting to think I might buy some Facebook. Facebook is just so cheap at this point in time. It's down to 216s, 215. That's just really, really cheap. I tend to think it's going to be back. Facebook's not going to fail. And so I think it's probably one of the best dip buys this year, but maybe I'm wrong. It could just crash and fail for all I know. I have no idea, but we'll see what happens. But good luck, guys. Again, if you want to help support the channel, you can check out some of our affiliates. You can check out Top Step. Top Step, if you want to trade and day trade specifically the futures market, which is like the SPY, the QQQ, you can trade what's called the E-mini or the micro E-mini on Top Step. They fund traders. They give them a demo if you can hit their target while following the rules. They're fund you, regulated, located in the US. I'll post this link here. If you want to check out the crypto market, check out BitGet. BitGet allows you to copy other profitable traders in crypto. You can invest in crypto. You can trade crypto futures with up to 125 times leverage. You can copy other profitable traders really easily. And I'll show you guys BitGet here. You know, there's a lot of really profitable traders on BitGet. If you go to their copy trade section, you can see there's traders with ridiculous accuracy rates. If we go to ROI here, you know, this guy's 96% accuracy. If you scroll down, you'll just see a lot of really profitable traders that you can copy trade for trade. You can select the ratio if you want to follow them with 75% of their size, 50%, 200%, whatever you want to do. And you can copy them trade for trade. It shows you their ROI. This person's up 514, made $3,100 in the last 3 weeks, and you can give them stop losses and all that good stuff. If you want to check it out, here's the link. And well, no, the girl's right here. Swab. I mean, she's right here. You know. No, she's right here, man.
No, I mean, it's.
If she wasn't here, it'd be clickbait. But she's right here, man. What do you want? You know.
Yeah.
You just not see her? I mean, look, she's prettier than me. Who do you think I'm gonna throw on that thumbnail, man?
Trading gets fun after you get past the boring ones.
Yeah, for sure.
I'm getting there. I mean, not nearly where John is, obviously, but no, I mean, I
She's learning.
genuinely want to learn and understand, and yeah, you know.
Yeah. Yeah, for sure. I think Facebook is cheap, but maybe I'm wrong. I don't know. Like I said, maybe it just crashes down. The last affiliate. Yeah. Good luck, guys. We'll see you guys tomorrow. I know, Swab. You're all good, brother. Yeah, dude. Listen, if it's between me and her, I'm throwing her up, dude. You know what I mean. And you would too. And so it's all good. Hey, love you all. We'll see you guys tomorrow. We live stream every weekday morning. We'll be back live as always. Good luck. We'll see you guys then.